Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Castrol India. Is it a buy at these levels or an avoid? So let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Castrol, here's a small request. You can support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months, so that's a 16% discount. And if you can't pay on Patreon, you can join on YouTube, and you get all the benefits on Patreon on YouTube. Now about the company. Established in 1910, Castrol provides oil, lubricants and other products in the same field. Have global presence with businesses in major centers across the globe. The market cap of the company is around 11,000 crores, and it is a market leader in this space. It caters to two-wheelers, four-wheelers and even commercial vehicles, etc. So it is a renowned brand in this lubricant oil segment. If you look at the numbers, these are December quarter numbers. So sales went up by 16%, but profits were flat. So there were no gains in terms of profitability year on year, although last year wasn't that great because of the pandemic. So the results were not at all, you can say, satisfactory in that regard. There's high promoter and institutional holding in the stock, and it is a very good dividend yield company. At the moment, the ROE is around 42%, margins is around 28%, but it got hit this time around, and that's why the numbers on the profit front were not that great because margins were hit, gross margins. In terms of performance, stock is down 50% in the last 4 years. It hasn't done at all anything. Numbers have been decent, but the stock hasn't performed that much. Return ratios are strong, above 25-30%. Currently trading at 14 times earnings. That is also very attractive. But other companies producing better numbers. That is the issue. There are other sectors like IT, even select pharmaceutical companies, healthcare companies, even in you can say consumer domain, other types of consumer ancillary firms that are producing very good numbers compared to somebody just holding on to Castrol or the likes of it purely because of dividend. So dividend yield is good, but stock appreciation hasn't been that great over the last 3-4 years. So what are the issues that are plaguing the company? Depreciating rupee is one, and again this is going to haunt the company in the June quarter and the March quarter with the rupee going to, you can say, $1 is at 77 rupees or so. It is depreciating even further. Auto industry has gone through a recession, and with now semiconductor shortage and many other parts shortage and expensive, you can say, uh, expensive cost for most of the products that go into autos. I think lubricants will suffer, Castrol will suffer going forward. Raw material prices have increased and are increasing even further. Demand has slowed down because of the pandemic, so that is why the stock hasn't done well over the last couple of years. And now demand will slow down because of higher inflation and less money in the pocket, etc. It's going to be a very difficult time for such companies. If you look at the technicals, then there's major support around the 98 level. So below 100, there is a major support, but it is trading very precariously and very close to those levels. Once that is taken out, we could see even levels of 70. So around 70 is something I'm looking at. If 96 gets broken, if really things go out of hand with these oil prices and all. So it has been in a downtrend. If somebody even wants to look at it or buy into it, probably 70 to 80 would be better levels to look at it rather than buying into it at this point of time. So, in my opinion, avoid for the moment and let numbers kick in first. Very weak on charts, very weak fundamentally, also with the kind of you can say macro factors that are playing at the moment. So, look for other consumption plays, look for IT, look for pharma, look for export oriented plays going forward because of the depreciating rupee. Not at this point of time, but going forward, look at the results in the March quarter and then take your picks as to where you want to deploy the money, but probably avoid such companies like Castrol. So this was my video on Castrol India. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.